The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We are going to hear about a couple of more aggressive growth stocks that are on the fast track, according to our aggressive growth strategist, Brian Bolan, who's going to tell us more. First one that you want to talk about here is Skechers, SKX, the ticker. Now, they're in the footwear business.
Right, footwear, other apparel, and, you know, they've been really hot here over the last couple months, really. Last, 6 months, over the last two earnings reports, there's been significant upside surprises. And that with that, estimates have been moving up, so that's going to give you your Zacks #1 strong buy rank.
Okay.
But it also has a growth style score of D and a value score of F. And I guess the reason for that is that the price has moved up so dramatically, over the past few months that the value end doesn't like it. The growth style score, I'm having difficulty figuring out why it's exactly a D right now, because it does show great numbers. We are seeing some great margin expansion, and that has helped push the multiple higher.
You wrote recently this could be an acquisition target. Why?
Right. They have been beating, and the idea of being an acquisition target here is because we look at the big player in the footwear apparel industry, and especially in the tennis shoes and athletic wear. Nike is the big name.
Right.
Nike has a market cap of just around $80 billion. Skechers is just a little bit south of $8 billion. So when you think about like the big boy in the space looking at the smaller company and it's growing significantly, the big boy may take a look at this and say, you know what, I want to have that growth as my own, and my shareholders will reward me if I go in and bid, even up to $12 billion on something like this. And right now with that huge growth that Skechers is having, a company like Nike would love to have that.
Yeah. Okay.
If we look at the chart here, we can see that Skechers has really run up here. Just in the past few months was 100, now about 160, or I guess 155 yesterday as I made this. Still at 32 times forward earnings, but still showing signs that there's a lot of growth left in this story.
All right, and yesterday was Monday, the 10th of August, all right, 2015. All right, ServiceMaster Global, SERV, the ticker, is another stock that you've identified with aggressive growth.
Right, and I like this one for a couple of reasons. The first idea here is that it's a conglomerate. It's made up of a lot of small companies that were just kind of rolled up into one, and then they kind of spin this thing out. So it's a somewhat recent IPO. There's only been 4 earnings reports. And I say recent, it's about a year old, a little bit more than a year old.
Okay.
Terminix is kind of the big driver here, and Terminix, as you may know, is the pest control place.
Why do you say that?
Well, I was I was assuming that
that I have pests at my house.
You have pests or your neighbors. I mean, Chicago's a big city. We would hear here and there if there was roaches or something like that.
Okay.
But it also has other things like Merry Maids.
Right.
You might have Merry Maid or American Home Shield, which I think is like a home alarm service.
Oh, okay.
That's probably definitely more up your alley for all the valuables that you have.
Maybe.
ServiceMaster Clean and Restore, and I think that's kind of like those things when there's flooding or something like that. They'll get all the water out of there and put in those dehumidifiers to pull out everything. So this is a Zacks rank #2. It slipped to a 2 recently. It was a #1. Just slipped to a #2. It has that growth style score of A and value score of C, and that I like to see the divergence there in the value and growth, because value investors and growth investors are looking for 2 different things, and I like to see the big high scores for growth. So for the last 4 quarters, every one of it has been a beat of the Zacks consensus estimate. We like to see that. And the valuation is pretty good here. And I guess, one of the other big reasons that I like this stock, and I think institutional investors like this stock, is it's got a lot of diversification in that it's not just Terminix, it's not just ServiceMaster Pro, it's not just the home security business, it's all sorts of things, so that gives it some diversification inside of itself. We see that the stock had run up earlier, a little bit over 38 to just shy of $39, but then has come back significantly here. It did just post a earnings beat, but the stock did come off, trade lower by about 5%, and I think that gives us a great opportunity to look at this as an entry price here at a very solid play. Institutions really like it. It does have that growth style score of A, and it also is a Zacks ranked number 2 buy.
I'm a pretty basic guy. I don't have a lot of services, bells and whistles in my life. I have a pool, but I don't have a pool boy even.
Well,
I bought the wife a snorkel, gave her a mop.
Well, if you need someone to help you clean it, I'm the guy.
Oh, okay. I'll keep that in mind. Do you own either of these two in the meantime?
I do not own either one of them.
All right. Well, if you want to check out more stocks or stock picking strategies or even stock commentary, you can go to our website, Zacks.com. If you're not there already watching this video, there is a whole plethora of information just waiting for you to peruse through. And if you're watching these videos on YouTube, don't forget, you can always subscribe to them there and even comment on them. With Brian, I'm Terry Ruffolo.